Welcome everyone to Admiral Markets. My name is Chris. We're going to take a look at the strategy webinar on this 17th of December. It is a live webinar, and that's why we also want to show you this disclaimer. As you probably know, this webinar is intended for a global audience. Please take into account that it may not be suitable for everyone. To find out if it is, please contact admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. All right. With that warning said, also please be aware that trading for exchange and financial markets is considered high risk and therefore may not be suitable for everyone. To get more information on that and to find out if it is suitable for you, go to a financial advisor, an independent financial advisor for more information. This webinar is not advice and is for informational and educational purposes only, and by continuing watching this webinar you agree with the disclaimer. You can also request a copy of the disclaimer by going to admiralmarketsglobal.com and requesting and contacting the appropriate entity. All right. Then we have the following things. Today we're going to take a look at strategy. And strategy, there are a couple of strategies we can look at. Let me open the chat box. If you have a preference, let me know. Otherwise, I will just choose one. Options are fibs, moving averages, Camarilla, trend lines, and let's see, am I missing something? Probably I am, but anyhow, that's at the moment I can think of. We can use this entry model to check if there's some suitable setup, and the exit is more of a discussion. But if you have any questions regarding entries or exits, just let me know. We did discuss a while back about exits, so I'm not sure if anyone used any of those techniques in the meantime and what your results are, but if you want to share, by all means use the chat and let me know. Alrighty. With that said, let's take a look. Before we take a look at the charts, at the calendar quickly, yesterday was a dramatic day on the ruble. I'm not sure if you saw the chart or saw the headlines by any chance. Did anyone see it? It had an intraday movement from 58 dollar ruble to almost actually above 78, which basically means a 2,000 pip move all within hours instead of months. I mean, we're looking at the euro dollar fall, not even 2,000 pips, and it's taken more than half a year. We saw dollar yen, I think, move against 2,000 pips, probably just a bit less than half a year. Just to give you the enormous difference here in time scale. All of them have traveled 2,000, euro dollar not even 2,000, but the dollar ruble did it in a few hours. So it was an amazing burst of momentum. A lot of weakness from the ruble. And yeah, I guess if you look at the news there, you'll find various reasons, political and economic reasons that could explain it, I should say. And well, I won't comment on that. I don't have a particular opinion on that, but it was already so that since September the dollar ruble was going up, right? And accelerated specifically last week of November and the first week of December. I mean, it was the rest of the whole year was between 33 and 36. Then September it started to go into 40s, low 40s, November high 40s, and it really took off from 50s to 80, almost 80 in just this last 2 weeks basically. Acceleration. So take a look if you didn't notice. It's quite interesting. Could be useful. Today we have, I'm not sure how the dollar ruble will go, but we have FOMC meeting minutes later today. I'm not expecting a lot of things to happen with that. I mean, with the holidays so close, it's just my assumption. Let's see if that's true. Usually speaking, the markets do quiet down during holidays, so if anything, I would expect dollar consolidation for the next few weeks, even into February or March. I'm not expecting a lot of movement for the next 2-3 months on the dollar, but I could be wrong. I'll tell you exactly at what points I would consider myself to be wrong. Besides that, we have pound meeting minutes and claimant account change, so that's a big one too. Let's see what that brings to us. Did anyone trade, by the way, the dollar ruble by any chance? Did anyone trade it? I didn't. I know someone who traded it. I think it was, as far as I understood, it was the first time in his life, and traded it. Took a long, saw a setup. No idea why. That day he was looking at the dollar ruble, but maybe he saw already the big movement prior to that, and took a position and took the profit and re-entered and made 1,000 pips on 2 trades to the upside. Never traded it before, or very rarely, at least at the very minimum. Traded it for the first time and made 1,000 pips on it. So that's an interesting timing, or an awesome timing, maybe, right? Better said. What a story. Let's see. Okay, with that said, let's take a look. No preference for strategy. Justina says, never in my life. Edith says, also doesn't trade a ruble. I don't trade it as well, so I'm the same group as you. Let's see. Let's take a look at our dollar then. So what levels are important for me? 128 and 130. I wouldn't expect price to go above it. I expect the consolidation to stay below that, as I said yesterday. And ultimately, if it breaks below 122.50, okay, then we can see maybe some acceleration to further downside pressure to 120, and maybe below it if we break it. For the moment, I'm expecting some ups and downs that stay above 122.50, but probably stay below 128 for the next 2-3 months. That's basically my level. Now, that doesn't mean that there will be no trades, but I think our profit target should be kept to a realistic, let's say, not too greedy, not too, how do you say it in English? We shouldn't be aiming for too much, let me say it this way, because the limits, the boundaries here are going to be relatively quite tight on this daily chart. 4-hour chart, you can see that we stopped at 23.6 yesterday, just a little bit shy of it, but the difference was very minimal. It can happen sometimes. 17 pips on a 4-hour chart, that can happen. So I wouldn't be surprised to see price now fall today, all right, to about halfway probably. Seems a most likely target. So if we put a fib on the upside we've seen so far, all right, then I think any of these fibs could be a target, even the 38.2. But statistically speaking, I think there's a higher chance that we go at least to 50 or lower. We could even go to 78.6, 61.8 before making a turn back up, I would say. Mind you that this could be very choppy. So we could see, for instance, price bounce off the 38.2, make a fall to the 38.2, bounce up, make a fall to the 50, bounce up, make a fall to the 61.8 before we see a bigger turn like this, then down again, then up. Do you see what I mean with regard to this? This is a very, I think, likely scenario. So just because these fibs could be bouncing spots, that's what I mean with be conservative on the TPs, because the bounce before we get another consolidation could happen quickly and frequently. So I just want to check if you see what I mean here. You see what I mean, right? A very choppy kind of slow movements with a lot of bounces. The moving averages I use, if you're new or if you don't know what the moving averages are, there are actually 4 of them. There's a kind of intermediate moving average for the trend, intermediate trend, 89 EMA close, and then there's kind of like a support or resistance band, 21 EMA close, but also the high and low. The advantage of the band, just in case you didn't hear me say before, is the fact that there's a bigger footprint on the chart. If there's only 1 EMA, I think of course it gives an idea, but I think because you have 3 EMAs, it kind of gives more of a footprint and it gives more of a zone in general than a specific point. I think it's more realistic than one level. It gives more an area. It could be a bit below it, a bit above it as well. Look at this. We have a small spike above it. Very small one, but ultimately price respects that band. So yesterday was a good short when it went up into territory. Remember yesterday I was talking about I rather short it from higher or long it from lower. Wasn't too keen on trading it in the zone or even the break of that zone. That's, if you were here yesterday, that's what I said. So now in this regard, the break up didn't do too bad. There was a bit of a movement here of 80 pips, and in fact, it moved pretty nicely and fast. It was, I was worried of maybe some false break and then something like this, for instance, like doom, doom, doom. That's what I was worried of. It didn't do it. Still, I found it personally too risky and preferred shorts from there or longs from there that seemed more secure. So far, the short indeed from the daily R1 and monthly R1 and the 23.6 is doing nicely. And it's been going down some 88 pips. Now, if you are in that trade, I would aim for the weekly pivot and 50 fib at 124.10. All right. If you're not in that trade at this moment, let's take a look if there's anything to be done. We can use various strategies. As I said, fibs, moving averages, trend lines. Let's take a look at what strategy might fit the bill here, what kind of fit the situation and make it tradable. Now, trend lines is not really going to make it tradable. If we use trend lines, there's nothing really of a trend line that could be traded at this point. This trend line is not valid anymore. It was broken. Oh. Hang on. This can go. This can go. There's a trend line here. But if we break that trend line, there's not much space before we hit the 50. So we can keep it on, but it's not that valuable. What else can we look at? Fibs, we can look at fibs too. Well, fib, we had a 23.6 fib here already. That was one of them. Actually, if you look at fibs, along from the 50 or weekly pivot point probably makes more sense, with a target perhaps at the monthly pivot point, right? Just a short bounce. I wouldn't aim for more. As I said, I would be conservative on the targets. What kind of stop loss could it be with the 50 fib? I think below the 61.8 here. You see this bottom here and it's 61.8 plus a daily S2. So 123.60, 123.55, 45. Right, that would be the target. That is stop loss potential. It's probably 55 is enough, with the target at the monthly pivot point, which is 124.65. All right, so that'll be a bit. It's just the R2R is less than 1-to-1, but in this case, I think it's still okay. So that would be a fib trade. How about a bearish fib trade? Is there anything? We would have to zoom in lower time frame, go to the 30-minute chart. I know this is a lot of indicators, so maybe for this particular exercise, let me just remove everything because it's getting probably a bit too clustered. Oh. Hang on, folks. The chart is good. Bearish fibs. Well, the first fib we can put on is here to see have we hit the minus 618 target. Well, we just missed it here, but now we did. So if we let's move it from here to turn back up and go up to the 1561.8, and short will be from there. The stop loss would be above here, the entry here, I should say, the stop loss here, with the target at the 61.8 fib, minus 61.8, or the minus 1,000, which is 124.10. You see that? But we would need price to make the hook back and then fall. That would be a bearish fib. It's the one risk that is the risk kind of that is here at this point is the fact that this is a small fib. Small fibs are always 30-minute chart. You're only fibbing part of the swing high, swing low, not even everything. The advantage is that there's a very tight reward, a very tight risk, and a decent reward here. I should do it the other way around. Red for risk, bigger reward here. So yes, probably, I mean, there is a chance that this trade will turn into a loss, like all others, maybe higher than others, but the reward should compensate that. That would be, but I mean, I'm not sure if we get the bounce. There's some bounce here, but that would be, I mean, if we use fibs, that would be the way to use fibs. The fibs are always waiting for retracements. That's just the nature of fibs. Or we're trading the targets. That's another way of doing it. Right? You put a fib from high to low, and instead of taking the retracement, right? Let me do that again. Up, down, and taking the retracement. No, you wait for the target to be hit and start to look for shorts actually at the target. That would be the other way of doing it, of course. So those are the two fib trades, either from the 50 fib or 61.8 on a bigger time frame, or a long or a short from here. That's using fibs. Now let's take a look. Sorry if you hear any background sound, but there's someone is checking the electricity or the gas measurements or something like that. So that's why. Let's see. Let's take a look now using other things. Let's take a look at Camarilla. You can see we're punching through the L3, so we're already getting into this bearish intraday zone. And we bounce off the L3 earlier in the Asian session. So good moving averages. I mean, the 21 is bearish. The 89 is there's still not aligned, right? So what we could see is sort of consolidation here and then a fall. That would actually fit within the Fibonacci as well. There would be two ways. I mean, yeah, two ways of trading it. Either actually just taking it now. In fact, it's possible. Same stop loss. All right, and not wait for the pullback because we are below L3, or wait for the pullback. Either indeed take the fib idea or take the break of the fractal. All right, now I know that there are a lot of options here. Some traders actually totally dislike that, the fact that I give options, and rather have me choose one. But well, I mean, I could just say this is the best or that is the best, but then I don't think it really helps you in the long term. I think that at any point in time, there are usually a couple of options where stop loss could be, where TP could be, where the entry could be, even after you've identified that you're interested in it. And yeah, how I see it, I think that that is a luxury choice, in my opinion. I mean, it's just gives us more options. In my opinion, for my choice, I'd rather wait for the pullback, but I'm more of a pullback person, so that might not surprise you. It depends. I also take breakouts, though. Don't always wait for pullbacks. Anything else? The moving averages. Really, if you look at the moving averages, there is no trade at the moment to the downside because the 4-hour is bullish. The daily is bearish, but it's all counter trend. All the movements are counter trend, the trend of that time frame. Why? Because daily price is moving up, but then trend is down. 4-hour trend is up, but price is moving down. You see that? Just in case you missed that, let me write that down. Daily, 4-hour. Trend, price. Daily trend is down, but price is moving up, counter trend. Trend on the 4-hour is up, but price is moving down. It's quite funny, isn't it? Exact opposite on each time frame. And trends are opposite of each other as well. So If you prefer skipping the euro, you have your argument now. That definitely would not be strange. In fact, if you look at this, it certainly makes sense. Yesterday we were talking about it as well. The hourly trend is up, but price is moving down, isn't it? Right? There is no time frame except the 15 where we've gotten into a trend down situation. So from my point of view, the moving averages are not set up for trading. All right. So with that said, let's take a look at another pair. Anyone have a preference for a pair? Not at the moment. Pound dollar is, when I look at the 4-hour chart, still within these two orange lines. So if anything, there's a bounce potential for downside. The pound dollar is spiky. It likes to spike up and down. It likes to move fast. So in my opinion, this is not so interesting. It's just a lot of noise here. It's difficult to find signals in noise. But if anything, as I said, yeah, it did hit the resistance. So taking a short close to that resistance at monthly pivot point would have been a good thing. We can still discuss if it's now a good thing. I mean, it's still not that far. I mean, it's getting less interesting, of course. Just checking the sound. Ilya is having problems with the sound. Do you hear me? Sound is good? Okay, cool, thanks. Yep, great, thank you. Wait, let me just write one more time. Alrighty. So fibs, by the way, on this pound dollar, I wouldn't use fibs. Fibs are for trends or for zigzags. You don't necessarily need a trend for fibs. If there's a clear momentum followed by correction, it could be a zigzag. You can use fibs for zigzags, even if there's no trend. If price makes a zigzag, but otherwise price isn't really trending that much, it's okay. It's okay. But you got to be careful with it, though. The pound dollar, you know, I don't see any zigzag formation that makes sense or trend, so I wouldn't use fibs. Wouldn't use moving averages either. So what tool or strategy could make sense here? Trend lines? Nope. I don't think so. I don't see any trend lines here anyhow, and I don't think they much make sense in this consolidation. Horizontal lines, yes. We can, of course, use the top of resistance for trade decisions, yes. That's what we said yesterday. What else? Can we use Camarilla? Yeah, I think that's probably the only method, pivot points of Camarilla that could make sense in this environment. In that regard, let's see, we're still above the L3. Kind of awkwardly momentum against it here. But I guess the only thing below L3 could be that continuation trade to the downside now. Let's see if there's something better though. Dollar yen. Dollar yen is getting back into resistance. But yeah, the thing is that that this could be a bigger bounce spot too. So we might see a zigzag here. All right. This has trended down a lot. So technically speaking, we're going into resistance within this hourly trend. That's what I was thinking this morning. Now if I rethink it, reanalyze it, I'm a bit worried at the fact that that could be a bigger bouncing spot. If you look at the 4-hour candle, pretty bullish. Could be just a turning spot, in fact. We also reached the -618. Remember, I talked about it yesterday. Look for the target. That's one of those examples where you can use fib targets for entering as well, or exiting and entering, if you want. Pound yen had the same, remember? I think we talked about the pound yen. I'm not sure about the dollar yen, but they both had the same thing. Dollar yen bounced off the minus 618 nicer than the pound yen. Pound yen went through the target just a bit, but that can happen. Sorry, I was just writing Ilya quickly. I got a preference here. I forgot actually for the Swiss yen, right? Justinus, yeah, I'll take a look at it after the dollar yen here. So that was a good trade here. Is there any other trade at the moment? This is a bit of a, I would say, not the ideal high probability moment for trading. No. And I'm not sure if that is intuitive for you or not. I guess for those that are in here, maybe it's more intuitive because we kind of like, okay, we had to bounce, but now we're approaching resistance. Is this a good shorting level? Or will he get more of a bullish zigzag up? It's not a zone where I think right now there's a high probability of a lot of pips. There could be, but in my judgment, not the best. I sometimes are wrong in these judgments, though, and I skip trades, skip certain bouncing spots that actually, in retrospect, turn out to be a bigger move than I expected. What can you do? It's never going to be perfect, right? But in this case, I think it's a limited profitability to the downside. I think we'll see more of a zigzag up. In that regard, let's put a fib from here to here. Let me get rid of this fib. All right. What kind of trades could we have with a zigzag potential? Well, a short actually, but higher at the daily R2 weekly pivot point of minus 618 confluence in 119.30 with a stop loss probably just above this top here. That could be interesting. But also potentially intraday trends up in here to the target. What could happen is price goes up to the minus 272, bounces off of it, and then up. So what is an interesting trade, in my opinion? Or it doesn't have to go up right away. It could go down first, then up, then down, then up, then down, for instance. So when you look at this potential, what is an interesting trade? In my opinion, an interesting trade is from this blue dot to this blue dot, and from this pink dot downwards again. So what does that mean for now? That means I'm waiting until the minus 272 target gets hit. Then I'm waiting for a pullback, preferably to about halfway, probably at least to this top again, and looking for a bit of bounce signal, or taking a pending order. I'm not sure. I'll have to think about it. Probably a bounce signal could be good because then when you get the bounce, you can put a tighter stop loss just below, or a few pips, 5, 10, 15 pips below that candle low, and then aim for this target. Of course, if you're in along from the minus 618 target, as discussed yesterday, then I think the target for today, what I would exit, is here. And I think that's a good trade where you could be locking in up to 350 pips. If you're a bit nervous for staying in that long, depends how big your stop loss was when you took the bounce here. But then even taking profit now is not necessarily wrong, depending on your stop loss size. Right? Or take half now and half at the upper target. scaling out can help with easing the psychological pain, perhaps, that we have to go through with floating profit and not being, not able to lock it in. So that's my 2 cents on this, using fibs. Any trade using moving averages here? Again, not really. Because everything is going, it's the same like the euro dollar. We got different trends on different time frames, and prices going against those trends. One thing though we notice is that the daily chart the daily candle did push through the 21 band yesterday. So ultimately I wouldn't be surprised to see a bigger correction take place on this daily chart all the way down to 114.70. Maybe we won't get there. Actually, if I look at it this way, we bounced off the 38.2 fib already. So that might, forget that, scratch that. This could be it, but let's see. It's too soon to tell. Let's skip the daily. I think it's still, would rather wait for more information before saying anything about it. Let's take a look at some other pair, like maybe the Aussie. Okay, I said yesterday Aussie is in a bearish trend. Looks like a short potential, but I also said that that the Aussie weakness here is kind of the exception against the dollar, so that may be a bit more cautious. Remember, therefore I like the euro odd more and the odd Swissy more yesterday than the odd dollar. Despite the fact that I saw it bearish, the thing I didn't like about it was the dollar was weakening against other pairs, so that made me a bit hesitant. That's what I said yesterday. Also, this slow price action also made me a bit hesitant. Despite the fact that it looked bearish, therefore like the others more, but in fact eventually did move down. Happened today, in fact, not yesterday so much. And we're breaking through this support level. All right, any trades left? Well, not from the Camarilla point of view. We already hit the L5. Not really from the pivot point of view. We hit the daily S2, and there's no reason to look for longs based on pivot points as yet, unless we get maybe lower, down to weekly S2, daily S3. So no. Moving averages, those trades have passed. Fibonacci, it's the only thing left if we get a pullback. But although we know from a lower time frame that we've actually exceeded most of these pivot points. So putting a fib on the last swing high, swing low could make sense from a Fibonacci point of view, but if we look at other strategies, then we might want to be careful with it. This fib could work well maybe for tomorrow, but not so much maybe for today. I would be cautious with it. But we'll keep it on and see if it makes sense tomorrow. Yen hit the minus 618 target. So anyone seeing this wick here could have taken the long upon the close of the candle, right here, or upon the retracement of the wick, about halfway with the stop loss below the low, of course, like this. And the target, well, that's really, could be tons of ways of exiting, really. Euro odd. That's a trade we discussed yesterday. I said look for a bullish candle here with a stop loss below here. Look, 152.70, I think, 152.75. First 153, and then I moved it down, I think, right? I think I first said higher, but I moved it down eventually. Well, anyhow, it went all the way up to 153.30, so anyone who took that, indeed, entered it around 151.48, had a stop loss at 97, 51 stop loss, and took away about 127 pips for about 2.5 units of risk, a reward versus 1 risk. Good trade, right? Let's take a look at it. Uptrend, a signal that we are pushing through. This candle, as I said, that's the key. Take a look at the hourly candle. Keep an eye on the hourly candle. Strong close above it. Why? Because we had a double dip. Remember we were talking about it? Dip, dip, follow through. Dip, dip, follow through. Dip, dip, follow through. So we had that. This was already consolidating, and therefore I was looking for the signal for the follow through. Follow through, bull flag, follow through. Same thing, the odd, I forgot about the Swiss yen. Sorry, Justinus. Getting distracted. Let me just really finish this odd Swiss. Same thing here on this candle. Stop loss here. Entry here. And down. So the odd Swiss also, depending on where you exited, giving at least more than 1-to-1. Now let's take a look at the Swiss yen finally. So hope some of you at least caught that trade, but I'd like to take a look at it again. So you see at least what I said beforehand and what happened, and you can use that info perhaps in the future. I mean the method itself. The Swiss yen, let's take a look on daily. Interesting, a lot of strength here indeed. Big Swiss trend. Yeah, it's gone to a level that we haven't seen on this chart at least, dating back to 2000, I think, right? On this chart, let me take a look. 1999. Yeah, it's a difficult one because it's really it's such an uptrend. We don't have any clear resistance of the past, so we're in unknown territory. Obviously, this is an uptrend, but on the daily, we are making some retracement in the 4-hour. Looking at this burst of momentum, I think it's like the dollar yen. I think it's more of I mean, looking at the momentum at least, there's a high chance, I think, that it's just a pause consolidation for more upside. Even more upside, just like the dollar yen. We just retrace to one of these fibs at 23.6 or 38.2, max 50, I would say, and move up higher to the target, 128, minus 272. Until that moment that we do make the flight up here, we could expect some consolidation in what is typically a wave 4 consolidation that takes a long, drawn out, choppy, but eventually not forgetting the bigger picture and realizing that if price does get to 38.2 fib, I think it could be an interesting long. Stop loss below the 50. I know that's a big stop loss size for some of you. The other option could be to put it tighter, maybe 50, 75 pips below the 30.2 fib, but that's just a very random. Better probably then if you don't like the looser stop loss to wait for some price action at the 38.2 fib, some confirmation of price turning at the fib. Until we hit the 38.2 fib, we can expect a lot of ups and downs and slow movement. So it might not be a very good environment. But if we do zoom in, there could be shorts and longs as we move up. As we move up, there could be shorts despite the downtrend because we could go to the 38.2 fib, or if we move lower, there could be bounces up followed by shorts again as we make that kind of bull flag pattern and consolidation. 30-minute chart. Let's take a look. H5 would be a good resistance zone if it gets there. Otherwise, we're kind of making a contracting triangle at the moment. Excuse me. Let's put reversal fibs on this downside. We hit the 61.8 fib here. Minus 618 target of that reversal fib is quite close to 30.2, relatively. So from a fib point of view, if it does get up to 122.80, it could be a short with a stop loss here, and it could be a reversal Fibonacci entry for a short down to the minus 272, 120. That's the only thing that I can think of at the moment. Ah, cool. Do you have it pending for from here, or do you have the pending from lower for up? Ah, cool. Yeah. Yeah, tight risk. I would probably aim for the 120, not the 30.2, because there could be some bounces along the way before we get there. In fact, maybe in this case, even aiming for this bottom, close to the bottom, could be another serious options to think about because of the fact that you can get a triangle here. You probably don't want to live through this trade throughout the holidays. So you might want to think about even a tighter TP. Because it could do this, and then this, and then this, and this. All right, yesterday we talked about the bearish candle on gold 2 days ago, and it got retraced. And didn't break Monday's high. So some downside pressure yesterday. Let's see, any trades for today? The thing is, the Euro-AUD and OSTRC are actually going back to the moving averages, and are right at them. So if anything, there could be continuation trades for downside. But, as I warned you yesterday, when a trend has lasted this long, there's always a point that you get the bigger retracement. Yesterday it didn't happen. The shorts worked out well on the Aussie. The odds were short and the Euro-AUD long. Today could be a different day. You don't know. We don't know. There's divergence as well. Well, not really. Well, anyhow, it's just a grinding move lower. It could grind again lower. Doesn't have to do. So that could be a trade setup. We'll keep an eye on it. At the moment, it's moving into the moving averages. Too soon to tell. What else? Dollar CAD uptrend, but close to a target, so I'm not really interested in it at the moment. Let's take a look at the euro dollar quickly again. Does anyone else have a pair that we can look at? Because I am not a big fan of what I see today. Maybe I need some inspiration from you. Pound is news event. Odd cat, look at this minus 618 bounce right there. 50 fib. Look at that. Down 50 fib. Well, actually, down 23.6, down 38.2 fib, down 50 fib, down 272 target, back to broken bottom, down to minus 618. Could it be more classical in a way? Right? It's really beautiful, isn't it? Look at that beauty. Very harmonious. Classical. We had a zigzag here as well. All right. Just of course, because we got a minus 618 bounce, doesn't mean that the uptrend, the trend will be up in the future. We're still in a downtrend, okay? So we still have to be cautious of that. So in that regard, this could be a hook back from more downside. It does look quite choppy. We'll take a look here at the Camarilla. Yep, could be a pullback for further fall. Could be a short right in here with a stop loss. Let's see, stop loss. Yeah, above, actually, indeed above this, these resistances. Yeah. That would be above 95.70. Take a look at the high of that candle. $95.71, so 95.7, 95.83, for instance. All right, and the target. Let's take a look. Aggressive target would be all the way at 92.40, but that's maybe too much. Take a look at the hourly. More conservative target would probably be aiming for the weekly S2, for instance, here, as a swing trade, or even the daily S3, or even the L5. If an early exit, quick exit is wanted. If you look at the 4-hour chart, we have a clear 4-hour, strong 4-hour candle below it. Do you see that? It's a very bearish candle. It's a pretty sizable candle. It's a close near the low. It's a candle that's pushing through the 21 band and breaking below it and closing below it. And now we're getting a retracement of that 4-hour candle. So if the short is taken here upon the retracement of that candle, but halfway, with a stop loss above the high of the last candle, actually a bit more than that, then I think it is a trade with a profit. It is a trade with an edge. It is a trade that has a decent probability, I think. So let's see. What I've seen so far, it makes sense. Justin says that the Aussie is overvalued, and indeed we see across the board here moving a lot actually. The Aussie probably trending the most now, indeed. Pound out here flying up 1,400 pips. Wow. It's not as much as the ruble, but it is a lot. Well, if you have any, do you have any questions? Anything that you would like to see again, or any pair that you would take a look at? Not a big fan of the Kiwi dollar at the moment. Just taking a look at other pairs here, but these New Zealand's are very, very choppy at the moment. Pound CAD is pushing a lot. Don't see anything on that one at the moment. Not too interested. Could be a reversal perhaps, hanging in the air, or some retracement, but right. Well, let me excuse me. Let me tell you that tonight Nana's going to take a look at Fibonacci arcs, expansions, and fans. And tomorrow evening we have a flashback of 2014. We're going to take a look at actually the PowerPoint of last year. Literally the PowerPoint, I saved it, so it hasn't been changed. Maybe you can even find a recording of last year, so you can double check me. But I will show you the PowerPoint of last year and take a look what went right, what went wrong, and then I'll talk about what I expect for next year. That's tomorrow evening. Tonight, once again, Fibonacci arcs, expansions, and fans. All right, sign up for those. Otherwise, I really don't have much to add regarding current market analysis. Just out of curiosity, maybe, I mean, how many traders in here use, let's say, use Fibonacci out of curiosity regularly? Just curious, because if anything, I think we use Fibs probably the most in today's session. Just curious. I got 2 yeses and 1 sometimes. All right. 1 no, okay. Kind of a mixture at the moment. No particular reason, by the way. I mean, I was just curious. Because it is a tool that it requires a bit more discretion, so it's not as easy, perhaps. I mean, it's not as, let me say it this way, it requires a bit more of our attention than the pivot points. The pivot points are there automatically plotted, and we can instantly use them indeed. That's the advantage of pivot points. Disadvantage of fibs. And yeah, but some advantage of fibs is, for instance, giving confluences and stuff, and extra value like targets and entry points. Robert is asking, how do you use the AO indicator at the bottom? There are various ways. You can use it as kind of like, what is the trend? Because if price is above the 0, you can see trend is up. If it's green, it's kind of accelerating. If it's red, it's kind of retracing and decelerating. The other way would be like if you have to see how far it has gone up. If it's a very high peak or valley on the AO, that shows a lot of momentum. And if it then retraces back to the middle line, which is called the 0 line, then the retracement could be finished. You can see here, for instance, a very strong move up. That's a momentum. This is a momentum. And when it decelerates and goes back to the 0 line, we've had the retracement, the minimum retracement we expect on this time frame has been met, and there's a chance of retracement finishing. And as you see indeed here, in this case, it's a good example because right there is where we get the uptrend again. And the retracement finished. So we have an idea when the retracement roughly could finish. Now, it doesn't always go to the zero line. Sometimes it finishes earlier. Like, for instance, well, here we don't have an example. Here, this one, as you can see, it retraced. It didn't hit the zero line that quite yet. Sometimes it finishes a bit earlier. Here, too. Those are actually, if you zoom into one time frame lower in the 30-minute chart, then you would see indeed the AO go back to the zero line. You could also use it for divergence because we have a strong momentum here, right? If the next top doesn't have a strong momentum and is showing a lower top than the previous one, there is some divergence between this top, the first one, and the second one. And if price is making a higher high in this case, but the oscillator is making a lower high, you have divergence. Could be dangerous, could be potential reversal. Not in this case, as you can see, a single divergence on the hourly usually is not doesn't break the trend. But if you have it on higher time frames, and if you have multiple divergences on one time frame, or if you have multiple divergences on various time frames, the chances of that happening are higher. So you can compare the peaks here on the oscillator to see if the trend is sustainable. The other thing you can use is you can use them for swing highs and swing lows. Basically, as long as the AO has not gone back to the zero line, it's one swing high, swing low. So in this case, is one swing high, swing low, because that's the moment where we see the AO from zero to zero line. This is one swing high, swing low, and this too here, because this is where the AO is from zero line to zero line. This is one swing high, swing low, and then this too. Back to the zero line here, so that's over, so we have a new swing high from here, and that's actually still going on. Why? Because we didn't go back to the zero line in this part. So this is all one swing high, swing low. Using the AO, that's how you could use identifying legs or swing highs or waves, some say. You can even use the AO for identifying waves and making it easier to spot them. Typically, a wave 1 will not have a big hump on the AO, be more moderate. A wave 3 will have a bigger hump. The wave 2 will go back to the zero line. The wave 4 will go back to the zero line. And the wave 5 will have a hump that is shorter than wave 3. That's how you can measure waves. Wave 1, 2, 3, 4, 5 will have that sequence on the oscillator, the awesome oscillator. I think that's it. Those things. You don't have to use, of course, the oscillator for all of these things, but these are all the options. The other thing I use is 4 hour. I use it for a strategy, a specific entry, in fact, or trigger, I should say. When the AO shows a strong momentum and then goes back to the zero line, then I look for the next fractal break, enter upon the break of the fractal, put the stop loss below the bottom, aim for 1-to-1, 2-to-1, or 3-to-1 trade, and or 3-to-1 trade. In this case, I'm not sure if this really qualifies of this, but let's say this qualifies. This is a big AO for the moment, and this retraces to the zero line. That means the next fractal break, I'm taking the long. In that case, that was here, this fractal break. That's the entry right here, stop loss here, aiming from 1-to-1, 2-to-1, 3-to-1. And as you can see, probably all three targets have been hit. So does that make sense, Robert? Any follow-up questions? Okay. Do you find the awesome oscillator, like, do you think it's interesting? Or is it maybe not so valuable for you? And I mean, I know, don't get me wrong, I don't care, I'm just curious. Not sure if I understand your question, Björn. Can you say it again? I don't know what stop half targets. Okay, cool. Well, yeah, I'm a big fan of the AO, as you see, but I know that others, use it in different ways, but these are the ways I use it. I was just curious, indeed, what you thought about it. Justina says the MACD. Yeah, MACD, I mean, you could use probably in almost the same way, I think. I understand, Björn. Yeah, that's not stupid at all. I think it's very good. It makes a lot of sense. You can indeed let it run until price shows something else. Yeah. That way, if price does exceed the take profit, you just catch those extra pips, or you may catch those extra pips, depending exactly, of course, how you trail stop it. Or actually not even trail stop it, but you kind of like look for market exits upon a candlestick pattern or signal. Yeah, that makes a lot of sense. You have to keep an eye on the charts, but it makes a lot of sense. You don't crowd the trade with trail stops, but you just actually like you take a market entry, you take a market exit. It's makes sense to me. I don't often use it on smaller time frames because it's just I'd rather go for the TP. But I think for swing or intra-week, it makes sense. You just have to monitor it a bit more frequently. Yeah, indeed, indeed. You can always use, of course, if you're up a lot, you can always use the fractals to protect some of that profit. Let's say you're up 3-1 or 4-1, then you might not want to lose on that trade anymore, let's say. Indeed, you can use those fractals. Sometimes even big candle bars, very powerful candle bars. I use highs or lows, but not the high or low of every single 4-hour daily candle. Not every candle has the same value. Depending on how I interpret the strength of that candle, I might use even the highs or lows, not the fractals. But it really has to be a clear, good candle. All right, folks. So thank you so much for joining me today. Hope to see you tonight and tomorrow night. And wish you all happy hunting. Cheers.